So when you think about the monetary system, part of it is really kind of this influx of kind of a transition process that's occurring between what is old money, new money, and digital money. And today we're going to dive into that with someone you might recognize. That's Mr. Mark Moss, who is an investor, entrepreneur, and of course, big YouTuber, big fan. If you haven't searched out Mark Moss, you got to find him on YouTube. You're going to love his channel. My name is Paul Barron. This is Tech Path. And let's jump into it, Dave. Mark, welcome back to the show, or welcome to the show. Thanks for coming in.
Yeah, thanks so much. I'm happy to be here today.
Excellent. Let's jump into a little bit about, first of all, your YouTube channel. Most of your focus, I've followed you for quite some time, but tell our audience a little bit about really where you guys have focused, because you've kind of evolved the channel over time from focusing just on crypto to a lot more into the financial side of things. Where are you now?
Yeah, I certainly have. So just quick background on me. I mean, I've been a full-time investor for 25 years, really in real estate, multiple businesses, Fortune 500 exits. I got completely creamed in the 2008 great financial crash. And I realized I was pretty good at making money, but I wasn't so good at understanding what this whole financial mess was. As I started to unravel that, I became a gold bug at that point. And I realized that gold and sound money was kind of the answer, and this runaway kind of fake fiat currency system was the problem. I then realized that I wasn't just a gold bug; I was actually a sound money advocate. And the channel, I guess the theme would be like Federal Reserve policy, fake fiat currency bad, sound money good. That would probably sum it up the best. I really started to I started the channel to specifically talk about Bitcoin I started talking a lot about it in 2015, 2016. And I do get into other topics, but they're always either Federal Reserve policy, bonds, interest rates, and things like that being the problem, and all the problems that causes. And then, solutions typically would be back to going to like a sound money system.
Yeah. Okay. So when the fact that you were moving so quickly into Bitcoin when you started your channel, obviously where it is now, when you think about how investing in the transition, I mean, there's a lot of people who are really reconsidering their entire stock portfolios right now in favor of. We've had Mark Yusko on, we've had obviously Michael Saylor on. Where do you think that's going currently with the current climate in today's stock market and the potential that cryptocurrency has for a lot of these early investors?
Yeah, I think, as you said, you've had some great people on, and so I would probably just echo what they're saying in the sense that it's probably the single best investment opportunity that we've ever seen. And so I like to look at it, you mentioned from my channel, I typically try to pull these historical narratives forward because I believe that history kind of helps us tell where we're going. So I really love to dig into cycles. And so one interesting cycle here is that about every 50, 60 years, we've had a technological revolution, not a new technology, not like the iPhone, but a revolution. And so industrial revolution, steam engines and steel, electricity, automobiles, the microprocessor. And right now we're witnessing another technological revolution that will completely shift humanity. And so to be born and kind of to be an investor in this day and age, it's the best opportunity that we have today. It's had a 200% compounded annual growth rate year over year for the last 10, 11 years, which is amazing. And many people, including myself, think that can continue for quite a bit of time. As you said, or as I kind of said as well, like I've been really talking about this a lot for the last 6 years now. And it's evolving. So I see a lot of times there's rigid thinking where, it's too volatile to be a medium of exchange or something like that. And people understand that new technology, especially revolutions, they take time to evolve. And so we're in this evolutionary path, and it's all coming together. It's all coming together kind of just as we thought it would back then. What's interesting, back to kind of your question, where how people are thinking about allocating this to their portfolios, it's always like a risk-adjusted basis. And so back in 2016, 2017, there was a lot of risk, right? But the upside was tremendous. Today, at this point, almost all the risk is out. Like there's hardly any risk, but we still have an easy 10x ahead. So from a risk-adjusted basis, there's just nothing like it.
Yeah, I think a lot of people don't really give it the credit it's due. Obviously, it's had corrections. When I say it, meaning cryptocurrency in general, Bitcoin has been kind of the lead dog out there. But when you look at, and I've talked to many, groups here that we follow on this channel, and part of the things that they kind of identified was in this recent downturn that we had with Bitcoin, the bottom, many were saying probably 47 to 45. Sure enough, that's about where it hit. Bounced right off the floor and came right back. So that kind of showed me that there was a lot more stability here than I think a lot of people give it credit for. Yeah. So when you look at cryptocurrency in general, and for new investors, maybe they're coming to our channel and yours, and they're saying, hey, listen, I've got real estate, I've got some stocks, maybe I've got some bonds, and I'm really looking for higher yield because I want to accelerate my potential here and really, get to an independent wealth status. And digital is kind of the vehicle. Have you seen any use case scenarios where people and or paths to where people have said, okay, this is the direction we're going to take, starting to split that from traditional investments into the cryptocurrency space?
Yeah, definitely. A million examples of that. Back to kind of what you're asking, right? That people have to look at their options. And so really what we're all trying to do, and a lot of times people need to kind of shift the way they're thinking about this, but what we're really trying to do is we're trying to protect our purchasing power. We're trying to store our wealth so we can buy more goods and services in the future. And so we have to take our fiat currency that we're earning and we have to park it somewhere because the Fed's design, that's losing value. So as you said, we have bonds and we have real estate and things like that. The problem is that most of those assets are not keeping up with the rate of the money creation. And so, we created 30% of the money supply has been created in the last 12 years. So that's 30% inflation. Now, some assets, lumber, steel, have gone up way more than 30%, some less, but that's about what you have to keep up with. So when you're looking at these assets, bonds or stocks, you need to keep up 30% just to stay even with inflation. And when you look at it that way, there's not a lot of choices. Obviously, the S&P, the stock indexes are at all-time highs, but they're in single-digit returns. And so really, we need those double-digit returns to keep up with the pace of inflation. Bitcoin is really the only option there. Now, to answer the other part of the question, which is, are we seeing a lot of people doing this? 100%. As a matter of fact, the institutions, the funds, even the banks, they are literally tripping over themselves trying to get into the market as fast as they can right now. Unfortunately, a lot of mandates in their funds or regulations and stuff are prohibiting a lot of them doing that. I think Michael Saylor, you mentioned you had him on your show. He really kind of started that stampede. He was kind of that first one. And what happens is, as soon as somebody like Michael Saylor does that, and then they outperform everybody, well, then everybody else has to catch on, which then kind of turns it into self-fulfilling prophecy. But we've seen Kathy Wood from ARK Financial. She said that she thinks that S&P 500 companies should have at least 10% of their treasury reserve assets in Bitcoin. 10%, which doesn't sound like a big number. We have Mr.
That's
Wonderful Kevin O'Leary. He says 3 to 5%.
Significant number.
It's a significant number. And if just the S&P 500 companies would move 10% of their treasury reserve assets into Bitcoin, that'd put it at about $500,000 per coin. And at the rate it's happening, it could happen within a couple of years.
Yeah. Okay, so let's talk about this whole transition of the currency systems, because we've seen obviously China moving towards the digital yuan. We've seen issues in India, a lot of pressures in Turkey. Now coming really from a lot of places, and I think these are last ditch efforts for basically countries and to really try to get an angle in on what's happening in the crypto space. Where do you see that landing? Is there any one specific country or one particular area of the world that seems to be ready to deal with this transition over others?
Yeah, for sure. There's by far and away a leader in the space right now, and that's China, unfortunately. So they rolled out their central bank digital currency. They really started working in 2020. Really, the first kind of test went out in October of 2020, and since then they've just continued to test even more. And they've announced that their goal is to have a full-scale launch by the Winter Olympics of next year. And so imagine if you were like a James Bond villain or whatever, right? You're trying to attract all the world leaders to one location, and so they're bringing one place. So they're bringing the whole world to China, and then get everybody using their one world or their new central bank digital currency at the time. So they're definitely the leader on that. However, what we've seen is they've started putting out propaganda. Well, they're putting out videos, we'll say marketing videos, And in one of their videos I found, and I had reposted at one point, they literally said that their plan was to get the whole world using it and get around the SWIFT system to basically take away the United States' ability to use the dollar as a weapon. And that really seemed to really put a spark in the pants of the United States. Jerome Powell has been kind of laissez-faire here, like we don't have to be first, we have to be right, kind of a thing. And all of a sudden, the Biden administration comes out and says, "Oh shoot, we need to get going on this." And then next thing you know, just this week, we saw an announcement that they're launching 5 pilot tests over the next year to really get this thing going.
So, okay, so obviously China kind of leading the edge. They see the digital scenario, mainly because they've been at war with us in terms of the monetary system for quite some time. SWIFT, when you think about that, for a lot of our viewers, they don't understand what SWIFT is, maybe, sure. Many of you. Explain SWIFT and how important it is to the world economy.
Yeah, definitely. So most people know what it is, but maybe they don't know what it is. So if you've ever sent a wire transfer, then you probably know what that SWIFT number is. And so basically the SWIFT system is the way that money moves around the world, whether that's me sending a wire transfer to somebody else, or that's governments or, large institutions sending money around the world. And so basically the United States controls that SWIFT system. And so when a country does something that the United States doesn't like, they apply sanctions. You hear this all the time: sanctions against Russia, sanctions against Iran, sanctions against, and on and on and on. And so it's basically a way to weaponize the dollar. If you don't do what we like, then we kick you out of the financial system. There's a couple problems with this. One problem is it's just kind of easy to understand. If I'm having a party and I kick enough people out of my party, eventually I'm the only person left at the party. And all those people that left they have the party now, right? And so we're starting to see that problem. And so we're starting to see the world as de-dollarizing at a pretty rapid race. We've seen Russia has been getting rid of their dollars, and they're acquiring gold and oil, or trading oil for gold, I should say. China is now dealing with Iran, and they're all trading oil and gold through gold and now through the yuan as well. And so the dollar is constantly weaponized as sanctions, using that SWIFT system, kicking people out. But what China is doing is with their digital currency, now they can work either around SWIFT, or we've actually seen announcements come out that they have created their own partnerships with SWIFT to bypass what the U.S. sanctions will allow them to do.
So that in itself has to, as you mentioned, sets probably alarm bells going off in the administration right now. The question I have is, do you think the United States is going to be quick enough to try to get to some sort of digital currency program within, say, the next 5 years?
Oh, definitely. I mean, I think if anybody's followed the cryptocurrency space, they see new coins are rolled out all the time really quickly. So I think from a technology standpoint, they should have no problem doing that. However, when you're the world's reserve currency, you can't really go that fast, right? So you do have to go slow. But I would say that they should be able to get it out, they said over the next 12 months. That puts it before the Winter Olympics of next year. I think they can do that. So from a time perspective, I think they can. At the end of the day, if we're looking at it over a long enough period of time, I just don't think it matters. I think, the central bank, and you kind of alluded to that in the beginning when you started talking about this, that they're trying to grasp on to anything left that they can. And I think it's just too little too late. At the end of the day, everybody knows it's still fake fiat currency. And the problem that I'm trying to do my best to raise awareness for is that one of the reasons why the banks want to do this is not because it allows them to keep printing money, because central bank digital currencies become the ultimate form of surveillance and control.
Yeah. Okay. So, and that's a big point here, because there is kind of this transition that is happening right now, especially around cryptocurrency and all the exchanges. The argument I hear a lot, at least on my Twitter, I get these Twitter wars all the time about where that's going, especially around the cryptocurrency exchanges. So that Coinbase, the likes of Voyager, Nexo, BlockFi, you name the company, that essentially these are the new centralized marketplaces that are essentially just replacing the old banking centralized system that we have currently, as we mostly know today. Do you think that they're say more? You're thinking about something in there.
So big news came out, I think 2 days ago. I was actually working on a video for this specific topic, and then even more news came out today on this. So just a couple of days ago, NYDIG, NYDIG is a giant financial institution in the United States. They back most of the banks, and they have jumped in full scale to Bitcoin. Most of these banks, obviously, they provide lots of financial products and services, and a lot of that is done through a back office, through a company that provides those services for them. That's how business is done. And so NYDIG provides back office services for about 300 banks, which is about 30 million customers. And so these 300 banks that they run back office services for, all these banks are going, shoot, we're seeing massive withdrawals, kind of to your point, we're seeing massive withdrawals from the banks going to Coinbase and going to Gemini. And the bank said, shoot, if we don't provide these services, our clients are gone, right? And once those clients are gone, they're gone. Banks are kind of sticky like that. So NYDIG has said, hey, we're going to provide these back office services for you. And overnight, 300 banks can now provide the same buy, sell storage that you might find on the Coinbase and Gemini. And so the banks see this. They know if they don't move now, they're going to die. And the announcement came out this week. So that's massive news for a couple of reasons. One is the way, again, back to kind of cycles, the way technology cycles work is that you get this new technology, but the technology by itself isn't powerful if the market's not ready for it and there's no infrastructure. And an example of this, when the automobile was created, that was a great technology, a revolution even, but there wasn't a market to go buy all those cars because there weren't even any roads and there weren't any gas stations. There was no infrastructure. And so we need to have the infrastructure. And now that infrastructure is coming, which means we're about to see adoption take off like we've never seen. Now, on top of that, one more piece that just came out today, well, at the time of this recording, which is important, is that now Ray Dalio's fund, Bridgewater, which is like the largest hedge fund in the world, and Dalio's been pretty outspoken about Bitcoin, their CFO just left and went to go work with NYDIG for Bitcoin services. And so what we're seeing is actually really amazing. And actually, I tweeted about this just maybe an hour ago. And at first, Bitcoin has attracted the true believers, the people that believed in it early. Like I said in the beginning, when there was a lot of risk there. But what we're seeing today are the greatest minds in the financial world are leaving their traditional legacy jobs and coming over. And so it's about to change the game and things are about to get crazy. I would imagine over the next several weeks, we're going to see some fireworks happening.
Interesting. All right. So that's exactly to the point is that once we see, because the ramp up in adoption is, I think for most people probably still look at it as somewhat rapid, but not near as rapid as it could be, especially when you get into mass market appeal, much like, if you look at something like, and if you go to Metcalfe's law, I've talked or listened to Raoul Powell talk a lot about this in kind of the growth of Ethereum and why it's going to be just unbelievable. But a lot of this is kind of also applies to other applications within society. I mean, Facebook grew over those kinds of scenarios. It's how fast can a node system grow? Same kind of scenario here if you have banks. So you're saying that possibly the banks could catch up here with someone like a Coinbase, Voyager, BlockFi, et cetera, and they would somewhat be in a position at least to be in a competitive nature with a lot of these newbies coming into the market.
Yeah, of course. I mean, think about this just for a minute, right? Like I said, banking is kind of sticky. It's kind of a pain in the butt to open up a bank account. You have all the KYC and AML, so all the documentation you have to provide, all those things. And so right now, people are forced to do all that over again to go open up an account at Coinbase or whatever. And then they have to connect their account, and then they have to wire transfer money, and some banks are blocking transactions. It's a big hassle. So and nobody's left their, pretty much nobody's left their traditional legacy bank yet. Right. So they still have the customer. So if they could just provide those exact same products and services without the customer having to do all that hassle that's required, I mean, of course, right? They could just jump into the market. But it's even bigger than that, right? So the bigger piece is that we talked about, or I was just mentioning how these companies, businesses, S&P 500 companies could move a portion of their treasury reserve into Bitcoin. The problem is a lot of businesses aren't able to do this legally. Their corporate bylaws don't allow it. Their mandates don't allow it. Regulations don't allow it. There's problems with custody, because like you can't just have the business owner holding the keys to all the money, things like that. Right. But now all of a sudden you have every business account instantly has access to it, and they can just decide to store some of their money into it. And so that's just
it's just a
massive
reserve
shift.
center.
Yeah, but it's hard to imagine. And to your point, which is great that you brought up about what Ralph Paul was talking about, and human beings, we imagine things linear, like one step, one step, one step. But to your point with like Metcalfe's law, things like this are not linear; they're exponential. And so that's a big difference. It's not just like a smooth transition, like a smooth line. It's exponential, and things start taking off really, really fast. Now, like you said, some people maybe don't see it happening that fast. Well, you did mention a year ago we were about $4,000, $5,000. Now we're at 58,000 as of right now. So from 4,000 to 58,000, I would argue is pretty rapid.
Pretty fast, yeah. Yeah, pretty fast. Let's talk a little bit about kind of this alternative scenario that in the altcoins, when you look at all of the opportunities that are happening out there, some of which are a little crazy and on the fringe, and then there's a few that, and when I say a few, it could be in excess of 50 coins out there that are really compelling potentials here. Do you see the altcoin, segment really continuing to make a play into the market space, or do you feel like there's just a lot of noise outside of a handful? Where do you see that going?
Yeah, so like I said, I really jumped in pretty heavy 2015, 2016. I started writing a monthly research report. I spent about 4 years just digging in, doing research on every project that came out there. I was really looking at this whole space as something going to be really, really big and change the world. But I have the longer that I've been in, the more research that I've done, I've started to change some of my viewpoints. Now, going back again, kind of looking at historical references, and again, looking at technology cycles. And so understanding the way technology works. So back to the car example, right? So we had the car. All of a sudden, everyone's excited. Oh my gosh, a car is going to revolutionize the world. All the investors and speculators jumped in. And next thing you know, there was 100 automobile manufacturers. But guess what? The market couldn't support that. Again, there was no infrastructure. So what happened? The 100 automobile manufacturers went out of business and 3 remained, Ford, Chrysler, GM. And then it started growing again. We saw the same thing in the internet space. The internet came out, it's this brand new technology, it has all these options and features. And in the late 90s, we had the webvan.com, the pets.com. But guess what? There was no market to support it. There was no infrastructure. So back in 1998, I think less than 5% of people had ever bought anything online. And the infrastructure, the internet was too slow. It didn't really work for that. So it wasn't wrong. It was just too early. And eventually those came back. And so in my opinion, most of the altcoins, we're going to solve healthcare and we're going to solve supply chain and we're going to solve all these things. Reminds me of Webvan and pets.com. The market doesn't support that at this point. It doesn't mean that eventually it won't be there. But being early is the same as being wrong in those instances. And so I believe that we're just seeing the exact same technology revolution, the cycles repeating. And so to your point, I think most of them are just noise and distraction. What happens, back to the webvan and pets.com, those businesses end up going out of business. But that technology ends up finding its way into the future. And so a lot of the applications they're trying to solve for, I think, we'll probably see that at some point. In my opinion, I believe it's all going to be built on just one single blockchain, which would be the Bitcoin blockchain. So all that technology will move and eventually just be built just like we have one internet, right? How many internets do we need?
Right.
And so I think they're all trying things and it's great and it's important because we need to try those things. But I think eventually it just comes over.
Interesting. All right. So I'm here with Mark Moss, of course, a famous YouTuber out there talking. I want to dive into my next topic, and that is kind of this war on cash. Yeah. And let's take India, for instance. They've done some things in the past where they've basically delisted, in a way, monetary instruments. I think it was the $500 and the $100 rupee.
1,000 rupee, yeah.
1,000 rupee. Okay. So when a government says, okay, that doesn't work anymore, you've got X amount of time to turn this in, and essentially it's gone. And then we see a lot of other countries where the currency has just been devalued. If you look at Venezuela, you look at Nigeria, many countries that are kind of in that particular status right now. Do you see that potentially happening anywhere in the Western world?
Yeah, I mean, definitely. I mean, we know that all currencies have a life cycle, back to cycle. So all currencies have a life cycle, typically, no more than about 100 years. which we're definitely at the tail end of that. And the problem is because there's a gross misunderstanding of what money even is. And so money is, and Michael Saylor talks about this, like money is energy. Everything in life is energy. So I have to expend my energy to dig a hole, and I'm burning calories, energy to do that. And let's say that 8 hours of digging would give me enough return to live on. I could decide to spend an extra 4 hours of energy digging, and then I could store that energy to be used at a later date and time. I would store that in a store of value, gold or money or whatever that may be, right? The problem is also money is communication. Money coordinates economies. And so printing more money, it doesn't work. Like if money is not wealth, money measures wealth. Wealth is goods and services. And so what's happening is by printing more money, they're giving stimulus out. They're not making people more wealthy. They're putting more dollars into the system to go chase the same limited amounts of goods and services. And actually, the goods and services have come down because of the pandemic and supply chain issues and things like that. So we have more money chasing less goods and services, which causes mass inflation. Now, what happens after we have mass inflation? We have massive income inequality. We start to have massive populist uprisings, which of course we're seeing all over the Western world. And the reason why is because it defies all natural law. You can't just create money. We need to create wealth, which is goods and services. And so at the end of the day, the system will always fail. The dollar has the benefit in a sense because it's the reserve asset of the world. And so we're kind of offshoring that inflation. So to your point, these other countries are seeing it way worse. So we're seeing in Turkey, Lebanon, Argentina, Venezuela, they're suffering from inflation big time. But eventually, yes, it catches up to everybody.
Yeah, it makes its way in. All right, so with that, where do the central banks kind of come in and play up into offering a digital currency? At that point, do you think the central banks start to potentially position to go in and around, traditional currencies from countries?
I think that's the end game at some point, and we're already seeing this, right? So like if you think about like a banking stack, for example, so typically you would have like a local bank, then maybe a regional bank, and then a commercial bank, and then you have the central bank, right? And then the central bank, there's a central bank above all the central banks, which is probably the IMF or the BIS. And so the central bank with their central bank digital currency could have the ability to send this credit directly to me and bypassing that whole stack of the banks. But we're even seeing the IMF is talking about the same thing. And I think that's where things are going to go. That's kind of the step they're going to try to do to try to save the system, if you will. I made a video about it. I called it the secret money layer. And basically the IMF, which is the central bank above central banks, they have what's known as an SDR basket, special drawing rights. And that basket is made up of a combination of other currencies. So the US dollar makes the majority of that basket, the euro makes a big chunk of the basket, and so forth. And the IMF has not been shy about talking about this, about turning the SDR into a digital currency. They've talked about specifically how the pandemic has really crushed the economies of a lot of these countries. And in order to help them, they have to extend loans to them, yes, and they have to make them special forgiveness loans. So we'll give you the money. We crushed your economy. Sorry about that. Here, we'll give you some money, by the way, but now you kind of owe us, kind of a thing, right? And they want to do it through these digital currencies. And I think the interim step would be probably to see those SDRs, that digital currency from the SDR, probably at some point going directly down to the people, bypassing the government central bank and all the rest of the banking stack.
If that were, okay, so that's a big move, obviously, that if that could ever occur. I mean, it's kind of what China is trying to do if you think about where their digital currency and potentially holding their citizens somewhat accountable to their system overall. That's a pretty big move. Of course, that would decimate the banking industry at its entirety because you essentially would not need them, other than maybe some utilitarian tools for loans and specific elements like that, but more instruments rather than just traditional checking accounts, things of that nature, which is what drives most of that business.
Yeah, and the point is that, and again, this is another thing I like to think about where we have natural laws, right? So we have gravity. Gravity is a law. if I have a bunch of money and technology, I could suspend or defy gravity for a little bit, but eventually I always am going to be bound by that law of gravity. But we're also bound by other laws of nature. And so, for example, human beings have ingenuity. We create things, and naturally we create deflation. So I used to carry one piece of wood at a time, and then I decided, oh, what if I invent a wheelbarrow? Right. So that was a deflationary move. I used to have a whole wall full of $25 DVDs. And now for $5 a month, I just stream the DVDs. That's deflationary. So technology is deflationary. And to your point, decimating the banking industry, for example, through technology, it's deflationary. The problem is that the banking system, the central banking system, has created an inflationary system. So they're trying to fight natural law. So they want to always inflate. The goal of the central bank is 2% inflation, right? Inflate. Prices should always be going up. The money supply should always be expanding. All these things that we were taught for our whole lives.
Right.
But the reality is that instead of my cup of coffee being 10 cents 50 years ago, and then 30 cents and 50 cents and $1 and $1.50, it should be going the other way. Like, don't you think with all the technology and shipping and all that, coffee should have gotten cheaper, not more expensive? So we should be working less. I mean, as a kid, I watched the Jetsons. I dreamed of having a robot that would clean my house for me, so I didn't have to clean my house. That's deflationary. And so natural law, human nature is pushing this, as you said, decimating the banking system. It's deflationary, but it's opposing this banking system that wants to be inflationary. So it's a battle for the ages.
It definitely is. I think, and the interesting thing is we're living in the age of when this is probably going to happen. All right. So with the potential of whether it's digital, the digital dollar, the digital yuan, those impact, meaning they get enough penetration or adoption within those societies, China, U.S., Western Europe, et cetera. Will that have any kind of impact on the cryptocurrency market in terms of people getting more comfortable with going, oh, hey, maybe I should park it over here in digital currency, but it's instead of cryptocurrency, it's going to be living in the digital yuan instead. What are your thoughts on, would that split the market in terms of digital currency?
Yeah, it definitely will. As a matter of fact, I'm just looking here, I tweeted 4 hours ago, many are afraid that Bitcoin is a Trojan horse leading to a digital dollar. But what few fail to realize, it's actually the other way around. The digital dollar will lead more people to Bitcoin. So that's what I tweeted a couple hours. So let me explain what that means. And so right now we have, obviously the youth, they live in a digital world. They play video games, they earn digital credits, and they live in that world. Even for me, and I'm not much of a youth anymore, I don't really ever carry cash around. It's debit cards and credit cards and PayPal and Venmo, things like that. But you still have a lot of people who think that if I can't hold it, if I can't touch it, it's not real. That's that fake internet money kind of a thing, right? And so what I believe is two big catalysts here. One, by having the central banks issue the digital currency, it gives it like legitimacy. Oh, well, I guess if they're doing it now, that's what the dollar is, and so I accept that, right? So that's one. So it warms people up to it. It forces them to use it. But the second piece is now we can contrast it directly against Bitcoin. So let me get this right. The central bank digital currency is programmable, and if I don't spend it by Friday, they take the money back from me, and they hit me with a 5% interest rate, but you have a negative 5% interest rate. And why is it losing value to Bitcoin all the time? Maybe exactly. I should jump over to that one. And so I think one, it increases adoption. Two, it's a glaring contrast. One is open, permissionless, borderless, censorship resistant. The other one is used as a tool to control me, and it's losing value. And I think at the end, it's just a marketing play at the end of the day.
Yeah, for sure. Mark, always great insights. I loved what you guys are doing over on your channel. Thank you so much for stopping in on the show today. I know you got to get going, so we appreciate the time.
Yeah, my pleasure. Thanks so much for having me on. Appreciate it.
Absolutely. All right. So you guys checking in on the podcast, maybe you're tuned in over there. Make sure and subscribe. Of course, you're right here on YouTube. Make sure and hit the bell. And of course, share this video. This is the best way to get a lot of these insights from many of the speakers, CEOs, and insight, really thought leaders that are really kind of changing the game around innovative tech. If you have an idea for a show, you can send that to us, simply producer@revernetworks.com, or you can always hit me up on Twitter @Paul Barron. We'll catch you next time right here on TechPath.